Okay, hello guys, welcome back. Welcome to FX, the very first article, the code. My name is JD. Today, I'm gonna respond uh, one of you who asked me about how to define a true range. So I'm gonna help you guys uh, see how to do it, because I've seen also uh, like two people asking the same question. So today in this video I will be trying to respond this question, and I'm sure it's going to help you. It's going to help every one of you guys. So let's say this is GBP USD. If I tell you to show me a range, for example here in this movement, maybe you can start from anywhere you want. Let's say if I give you a chart like this you see in your screen, so you may simply mark highs and lows. You may simply mark highs and lows. Maybe the highest point can be like this. Let's say you don't have anything on the left side, you only have, for example, a chart like this. So this will be the highest point you see on your screen. This will be your highest point you see on the screen, and this will be the lowest point you have in your screen. Let's say this one. And then if I ask you to mark a recent break or structure, you may end up choosing like this level. And see a structure that went back here and grab liquidity. These are kind of break or structure you may have in your zone. So this is break or structure, then you have a low, a high, a low, a high, and then you have another low. Then you are planning what? You are planning to sell from here, maybe from this sponsored candle. And then once you sell, you are taken, and then market continues to drop. So why is this happening? So why do you have a good structure like this, and then you are taken out, then market is dropping down? So as I always say, to define a true range, use manipulation. Try to use manipulation, try to study manipulation, and try to understand the next move, and to protect the high, and then define your range accordingly. That's how you can define what? That's how you can define your range. So here, what do? You can go to higher time frame. Maybe on the daily. On the daily, you have so many candles, so many candlesticks here. You have so many candlesticks. You cannot clearly see what is going on. If you are seeing so many candles, something is wrong. Make sure you see less candles as much as possible. So here you can try to see here, for example, if you can study the story of manipulation going on, you can see, for example, how market started manipulating these levels, meaning the next candle is going to be bearish. As you can see, the next candle started bearish, but it started bearish, but it closed manipulating the bottom. As you can see, now you understand the next candle is going to be bullish. Of course, they start bullish and they closed manipulating the top. Now you have an idea that the next candle is going to be bearish. You can see it yourself, guys. Bearish candle forming here. Then it closed manipulating the bottom. Then here you expect that next candle is gonna be bullish. Of course it will start bullish. Remember, when you are dealing with this, you don't deal with the close price, you deal with the bias. You know it will be bullish, but you don't know how it will close. You hope you get an idea. Then it closed manipulating the high. You can see now, you understand the next candle is gonna be bearish. So this is what I want to tell you guys. So you start from here. If you are going to sell this candle, I'm talking about this, to sell the high of this candle, make sure you first of all understood manipulation before you do what, before you take any single trade, because you will be starting from here, marking your ranges. And again, make sure once you are done that, you are going to frame your week, because you have an idea you are on weekly, so you are going to frame how your week is likely to behave. You know, you will start a week with a bearish move, but before a bearish move, there will be a certain test that will happen. This week will be bullish, like on Monday or Tuesday, before a reversal forms. So after getting your bias to what, come here on the first bar in this level, or just on the home page fastball.com. Then go to economic calendar here, guys. Then you will be checking the week, guys, depending on the date. Make sure you check all the news you have, here, all the news you have within that week of trading. You can simply, for example, if you are trading GBP USD, you can simply click on the screening. If you are here on the screen, you can see this. You see screen. If you are new to Fastball, I always tell you that, because it provides you with real-time data. So click there, and then you come here and click more. Then, for example, if you are trading GBP USD, you can simply untick everything. Let's say you have some ticks here, ticks. You can untick everything and remain with your USD and GBP high impact news. So to choose high impact news, you will check on this level. If you have all of these levels ticked, please untick and remain with what? Remain with free red stars. So this shows you that the news you are going to see will be high impact news. So you have to know, on Monday I have this kind of news event, on Tuesday, Wednesday, and so on, guys. Hope you truly understand. Then you can click on confirm. So once you click on confirm, you will be seeing what? All the news you have within a particular day, from Monday, Tuesday, Wednesday, Thursday, Friday. Then remember, you're going to trade weekly candle. So every single day you will see the news, and then after additional or more than that, you have what? You have a bias on your pair you are going to trade. In this case, I'm talking about the GBP USD, guys. So this is it. Use fastball.com. You will be accessing real-time data. You can also download the app if you want. So here, click on here, if you're going to trade this, you are going to define what? You are going to define a true range. To define a true range, first of all, where is your true stop? True stop is on this manipulation, on this manipulated candle, the high of it. And see, this is your true stop. This is gonna be your true stop. You start from here. Before you define your range, identify your true stop. Identify your true stop. It's gonna be your true stop. Meaning, true stop means a zone where market is not permitted to cross. If 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 manipulation is correct, this candle is not permitted to cross this area. Then where is the target? The first target is gonna be this low. It's gonna be this low, or the liquidity to target. It's gonna be this low. This is gonna be a liquidity to target. This is gonna be your sell side liquidity to target, and this low, next liquidity to target. Sell side liquidity to target. So you have your true stop. Let me add some markings, guys. You have your true stop, your true stop loss. Market is not permitted to cross this area. Market is not permitted to cross this area. Now you have a liquidity to the downside. So any range, no matter how small it is, any range you will see that was created by this candle will be a true correct range we can use. Of course, if we mark order flow, you will simply see a break or structure here. Then this will be a pullback. The whole move here, that you know market is gonna drop. Right? So you can go to daily, for example, if you want. You can go to daily, or you can go to 4 hour to realize that. So as you can see, allow me a bit to go back to our weekly first of all, because there's something I want to show you. I forgot to put here a vertical line. This vertical line will show you the beginning of the week. Then go to 4 hour, go to 4 hour. So on the 4 hour, you know you have a liquidity level market is supposed to take. So once market opens, it immediately took this liquidity, but we have what? We have another liquidity on the top. You have another liquidity on the top. The market took this liquidity and immediately went higher to grab what? To grab internal liquidity. So why is this happening? So why is this happening? Remember, on a high time frame, we are seeing that this is a liquidity target, but once a new candle start, it immediately went down to take this liquidity. Remember, this type of liquidity, of course, it's a break or structure. Break or structure is nothing but taking liquidity, guys. You have to understand. Now, what matters is to have a true stop here. So after breaking this level, of course, this is external liquidity being taken. You can mark it as your break or structure. This is your break or structure. Now you have a true range to use. How? So you have what? You have a structure that grabbed the liquidity on the left side and then went down to break a structure on the other side, or taking liquidity on both sides, if you can say. This is a liquidity being taken. This high is taken here. The market goes down to run on this liquidity to the downside. Now you have a true range from the high to the low here. So what the market is going to do is going to pull back. Remember, a test as the forms. It's going to pull back on this area to do what? It's going to pull back to grab internal liquidity before it falls down to grab what? To grab liquidity left behind. So why do we say left behind? Because here when the market was dropping down, it didn't take it. It decided to go back to first of all remove what? To first of all remove all of these liquidity left behind again. When the market was going down to grab this liquidity, it created a new liquidity to the upside. So it went up to grab this liquidity to the outside, leaving this liquidity down behind. So you get the idea how to define a true range. How to define a true range. Hope you truly understand what I mean. So let's say market went higher without taking this liquidity. Your eyes should be on previous manipulation, like this. Remember, if you can remember these arrows, we are using it to show manipulation. If you remember these arrows, so a break or structure, then you have what? A true stop here. This was our first true stop on the first manipulation. Then price was testing this level. After testing this level, our price did what? Price decided to go down. So if price is here and it did not break this level, you will start thinking internal or minor structure market is using here, right? I mean, let me draw it here. Let's take this level. Let me show what I mean. You have a structure like this. Liquidity is taken. Market, the weekly candle opens here. Right? It doesn't take the low. So if it opens and it goes higher without creating a new range, there are a few things that may happen. It may do what? It may be using a structure within this retractor high that was forming here to do what? To create a move to the downside. When I mean retro structure, I mean a structure that may be forming here. Then you get a small break or structure, then a pullback here, then the market goes down. And then if this level is not fully mitigated, something like this may happen again. See, and this is the same thing you have here, guys. It will be creating another liquidity to be taken, and then price falls down. So every move must create what? A true range. This is why you will see a break or structure forming here, another break or structure forming to the downside, then you get what? A true range for a sell. So do not open your chart and run quickly to mark ranges without understanding what? Direction and manipulation. Direction by using what? By using manipulation. Another example, on gold. Use Wanda on gold. So to understand what I mean, let me go to daily time frame and show this example. You can truly see how price manipulated this candle. This means we are going down for the next day. So where is your true stop? True stop is here. Meaning if this candle start is not permitted to break this level. So what is target liquidity? Your first target liquidity is going to be this low and this low. Then once this candle start, vertical line here, then go to like 4 hour or 1 hour time frame. Let's check 1 hour because we are on a daily time frame. So check on one now. What do we see? So if I ask you to show me a true range, where is it? From here I cannot see anything that grab the liquidity and broke the structure. So it means I have to look left on previous manipulation. I will see what? I will see a break of structure here. As you can see, I have a break of structure. And look at the liquidities that were taken here, even here. So we have what? Break of taking liquidity on both sides, taking liquidity and then break structure, as you can see. So the first move was here. Then since a new candle start without creating a new true range, this means market ended with a continuation of what? Of this move. The true move was here. This was kind of a re-entry. That's what I was trying to explain. If you need to see another structure, you can try to study smaller structure within this area. This push to the upside, this push to the upside. Then you can use like 15 minutes to see if you can see something. 15 minutes to see if you can see something. However, you truly understand that you have what? You have direction to the downside. What do you see? Now you have a liquidity being taken here on this move, a liquidity being taken here on this move, and then you have price breaking structure, then a strong drop continues to go down, range structure forming, range structure leads low high, low high, low high, range structure forming until market decide to come back to test manipulation, and then a quick drop forms. This is what I was trying to explain, guys. In case you don't see first liquidity being taken to create a new true range, hope you truly understand what I mean. So if market was to do this before going higher, this would be your true range. First liquidity is taken, then price drops down to break this structure, then a pullback is forming, then you expect what? You expect a drop. Hope I'm helping someone who asked this question. So guys, until next time, guys, good luck and good trading, and make sure you subscribe to this channel. Make sure you share the video, guys, and all the links, including Facebook, including our Telegram channel, they are all in video description. Thank you, guys. I love you all.